Hi everyone, welcome back to my channel. So in this episode, I want to talk about some consolidation options in Dynamics FNO. So very important topic is part of the finance module. Your client may need advices on what option to choose for the consolidation process. So what I want to talk about today is number one, what are the options or methods in Dynamics? And then I'm going to show you how to process, what are the steps, and then finally kind of giving you a high level comparison with the pros and cons with each option or each method, and then finally give you some tips and takeaways. So basically, there's no system demo in this one. I can do one if you're interested. Please feel free to comment down below. But this video is more to help you understand high level what are the options and how you should advise or suggest to your customer. So without further ado, let's get started. First, what are the two methods in the system? Number one, we call is hard consolidation. So it's also called consolidation online from Dynamics terminology. So basically, what is that? That requires to create separate legal entity solely for consolidation purposes. And basically, the system is going to transfer and copy all the balances from other operating entities into this consolidation entity. And then you can run a consolidation online batch job to run some elimination rules and trace the elimination journal posting for audit purposes, right? So this is the hard consolidation. I'm going to give you more details on the comparison later on. And then the second method is called soft consolidation. So we also call that financial report. Basically, that soft consolidation is through report design by defining the line definition or the row definition and the column definition from financial report engine. And what that does is basically to aggregate your data each time when you run the report. So there's no separate entity created to track the detailed transactions at the voucher level. It's mainly used to leverage Excel calculation formula and then bring the data directly through that report. Again, as I listed here, this exists only on report output, and that facilitates the fast and flexible management requirements. So now you have those two methods clarified. Now let's do a double click on each one to further understand what does that mean and what is the process, what's the pros and cons. All right, so first let's start with the hard consolidation. So in terms of process, first of all, you will need to make sure all the operating entities they are closed without the month-end close or year-end close completed. Then you can start this consolidation process. Regardless of the consolidation method, you always need to make sure the month end is completed of all those operating entities. All right, and then the second step, once you are ready, then we can go into that consolidation entity that we flagged for this purpose specifically, and then run a batch job called consolidation online. And within this batch job, that's where the power lays out, meaning first, you can select what are the source legal entities or operating legal entities you want to include in this consolidation. And then the system will bring all their balances from those source legal entities. And basically, it's a copy of the existing balance into this consolidation entity. At the same time, you're able to select what are the exchange rate types to be used for the account groups. Let's say, okay, for my balance account, I want to use month-end rate. And then for my P&L account, I want to use average rate. You can clearly assign a specific rate type based on your account group. And on the other hand, this consolidation online method also gives you the possibility to manage the ownership, meaning if I'm a parent company, I own some subsidiaries, but with different percentage, only 30% of Brazil entity or 30% of Australia entity, then if that's the case, you can easily use this percentage ownership when you run that batch job. And recently, I think in the 10.0.39 version, Microsoft also provides some improvements by delivering this consolidation template functionality. I can give you a deep dive in the future episode, but basically that template is kind of a predefined rules you build up, including all those points I mentioned previously. And when you run the consolidation, Instead of reassigning all those values or criteria, you just bring up the template and the system will carry all the detailed criteria within this template. This is highly appreciated to reduce the manual effort when we run the consolidation. And another thing is, let's say now I have the balances copied into my consolidation entity. Now I also need to run the elimination rules to make sure all the intercompany APA are handled properly. So this hard consolidation way really gives great benefits of using this elimination rules where you just define what are the main accounts to consider, what are the financial dimensions to consider, and then from there, the system is going to run this elimination rule and then automatically post the elimination transactions. And this is a huge advantage, and many clients choose this method mainly because we have the traceability of those elimination journal entries for audit purposes. And also, you don't need to build in some complex Excel formulas or different rules. You just let the system handle the elimination entries. But one thing to note here is this consolidation entity does not allow any manual entries. So let's say in this consolidation entity, I do need to do some manual adjustments based on my statutory reporting requirements. But I cannot create any GL journals within this consolidation entity. The purpose is only for consolidation process, not for journal entry process, right? So if that's the case, and you still want to use this hard consolidation method, the other alternative is to create a separate entity called elimination entity and then flag that entity for that elimination purposes. And within that elimination entity, it's going to contain all the elimination entries together with your manual journal adjustments. All right, so once you have the elimination rules and batch job run, you are ready to run this final financial statutory reports for your CEO or the finance team to review. Okay, so let me quickly do a recap of this hard consolidation online method. So process-wise, first you complete all operational entities month and year end, and then you run that consolidation online batch job in that consolidation entity and defining all those criterias. And third step is to use that elimination rule batch jobs to let the system automatically post the elimination journal entries, which is a big benefit of this method with voucher posting. And then finally, you can run your financial report for verification. And in case you need to store any manual adjustment journal entries, everything in one single place solely for consolidation purposes, and those manual entries should be created on a separate elimination entity to make it cleaner. All right, so this is about the hard consolidation. We can move on to talk about the soft consolidation. So what is this process? It's very, very straightforward. As I said, this is more a report design option. So there's no additional entities to be created. Everything is going to be handled within the report. So the first step doesn't change. You still need to finalize your month and year end of all the operating entities. And then the second step is going to build a financial report for consolidated entities. Basically, this is a report view. You can list entity one, two, three operating, and then eliminations, two columns, and then consolidated results. And then if you have other layer of consolidation entities, you can continue to add additional columns to build that layout. And you're going to use financial report built-in functionalities. I mean, by row definition, column definition, and through that reporting tree, including all legal entities. That way, that reporting tree is going to bring you to the data mart of that specific operation entity, and you can filter out easily the financial result of each legal entity. All right. Finally, one of the biggest advantage of using this soft consolidation method is to have that flexibility of currency switching, meaning that once you have that report built in, you can easily filter out what currency you want, and then the financial result is going to be updated automatically based on the currency you select. So that's really an easy toggle to switch in and out. But now you may have a question about the elimination journal entries, how I should build in that elimination and how that should be reflected on the reports. So basically, as I said, that's part of the Excel formula calculation. So for the elimination, you may say, okay, use this main account from this entity minus the other accounts receivable intercompany account from the other entity, and then having that calculation logic built in within the report. But the downside of that is you don't have any traceability of journal posting. You don't have any voucher generated to trace that elimination entry posting. All right. And then now you have the financial report ready and you can run the final report on demand, meaning that you can run that anytime you need. So let's say during the month end period, you may have some adjustment entries coming in and you add it on top of initial um, consolidation results. In that case, you can just rerun that report easily to pull out the new numbers. That also gives you the live drill down functionality per legal entity to see the detailed transaction level of vouchers to understand what are the numbers are coming from, what is the difference, or if there's any discrepancy, you have the original transactions very handy to start your analysis. And then, of course, you can export to Excel or any PDF format from the built-in financial report designer. However, if you are using the hard consolidation, in case you have additional adjustment entries just posted on top of your consolidation results, you will have to rerun the consolidation process, that batch job, kind of to refresh the financial results. That's one additional step you need to do. But again, seems like a downside, but depending on the client's requirement and tolerance, this might be accepted. Okay, so now we have covered both hard consolidation and soft consolidation. I'm going to go over this high-level comparison based on some key criteria from data storage perspective. The hard consolidation copies balances into one single consolidation entity, and then the soft consolidation doesn't copy or create additional balances. It's just raise the live data from each operation entity, right? And then from eliminations perspective, very straightforward. Hard consolidation will give you those journal entries posting with full audit trail, but the soft consolidation does not have any journal posting. All the logic is built in through calculation. And then again, we talked about the currency. So hard consolidation is less flexible because you have to run one currency at a time. And since this is a consolidation entity, you can only define one pairing of accounting currency, reporting currency, transaction currency. You cannot easily toggle on and off and switch between currencies, which is the main benefit of that soft consolidation method. And from ownership tiers perspective, if you have multiple level of consolidation, you can easily define a percentage ownership from the hard consolidation. But when you talk about the soft consolidation, you will have to build in that logic through calculation again from the reporting capability side. And for audit, that ties to the elimination journal entries. And of course, as I said, the hard consolidation may seem like a big deal because you have to maintain a separate entity. You have to rerun the whole job if there is additional journal entry posted. And even for the historical data migration, you have to rerun the hard consolidation to get the new fiscal year's results. So this may sound a little bit more effort compared to soft consolidation, which is really zero extra work. You just rerun the report, right? But again, depending on the client's preference, if they are looking for the auditability or traceability of elimination entries, then the hard consolidation is also acceptable because once you have the template designed and all the criteria figured out, it's really just rerun the job for the hard consolidation as well. So not a huge level of effort. All right. And as a conclusion, so hard consolidation is best for statutory packs, multi-entity currency history and audit purposes. And then for the soft consolidation is mainly picked when you need to have some flexible flash reports or ad hoc scenarios. Now, with all those comparisons done, I want to share some pro tips from my previous implementation experience. Basically, what are the recommended way if your customer is asking that question? So you can suggest them to use the hard consolidation if they are looking for clear audit trail for elimination entries and some manual adjustments. There's no doubt hard consolidation is the way to go. And typically, this is used or selected by larger organizations where they need to show to auditors and maybe have multiple level of consolidation based on different regions. So maybe they have one layer of consolidation for Asia and then consolidate that Asia to LATAM and then EMEA, etc. So if they have this larger picture of consolidation, the hard consolidation might be a better option. On the other hand, if the client is really looking for some flexible reporting options and they don't have a lot of people in the accounting team and they want to really have limited effort for month end and year end, and they don't have any complex global ownership, etc. So if that's the case, the soft consolidation is definitely the way to go. And even better if they want to have this flexibility of currency switch to see the impact on the financial results. And overall, what I typically see is a hybrid way, and that's also what I want to recommend with both hard and soft consolidation. And again, this might be overkilling for some small organizations who are looking for a more flexible way of management. But typically, for a larger group, we can use the consolidation entity to track all the journal posting for audit purposes and also for elimination automation. And on the other hand, they will also require some sort of financial reports to build this layout of different layer of consolidation entities, first Asia and then LATAM, etc. That also leverages the currency functionalities from the financial reporter. So basically, that's a combined way. Definitely more workloads, more time to implement, but they really get the benefits of all of those two methods. All right, so that's everything I want to cover today, and I hope this is really helpful to give you a high level overview and understanding of those methods of consolidation. And if you're interested in seeing a demo for the actual consolidation, I'm happy to do that. Please feel free to comment, like, subscribe down below, and let me know your thoughts. Thank you so much for watching. I'm going to see you in the next episode.